Welcome to the Investing Mastermind Podcast. My name is Signe Lundholt.
And I'm Michelle Markey.
Today, Michelle and I are going to share some of our investing epiphanies with you. Some of our journey where we got aha moments or just extraordinary times with investing and personal finance. And we're going to share how we ended up where we are today as investors and Warren Buffett-style investors. So I'm going to start my story. And it is a couple of years ago. It's around this time. It's summer. My husband is visiting his parents with the kids, and I have a long list of books I want to read. At that time, I had not been reading for years because I had little kids and I just could not focus on books at that time. But now they were a little bit older, they were out of the house, and now I needed to read some books. So I had a long list of books I wanted to read. And one of those books was an investing book. And for some reason, even though it was summer and I would usually never have opened a book like that in the past during a summer vacation, I opened that book. And that book changed my life. And that was Invested by Danielle Town, which is such a great beginner book. And I resonated so much with Danielle's journey in that book. And if you haven't read it, I highly recommend it. So Michelle, I know that book also means a lot to you, and the podcast and the book and Danielle and Phil Town's universe.
For sure. And in a similar way to how you experienced an investing epiphany by reading that book that summer, in a similar summer, maybe a few years before you, in the summer of 2017, I was feeling a little bit burned out from just slaving away at my job, doing the 9 to 5 and being in nonstop commuter traffic. And I was on the road for at least 2 hours a day, sometimes 4 hours a day, depending on where I had to go for work, like go to different business meetings. And I was just like, there has to be a better way than just slaving away, contributing money to my 401k and also in my normal Roth IRA. Even though I was doing all the right things with investing, I felt like it wasn't enough. And I was like, can I take my investing to the next level? And also, I didn't feel as if I really knew what I was doing before the summer of 2017. I was starting to, learn more about index funds and mutual funds, ETFs, and also different methods and practices of investing. But I didn't really feel like I had such a great handle on, say, investing in individual company stocks. And so when I came across the Invested podcast in the summer of 2017, I had a light bulb go off. I was like, yes, this is what I've been looking for all my life, learning how to invest like Warren Buffett and Charlie Munger. And then I know the Invested book came out that March 2018. So I started really following both Danielle Town and Phil Town from 2017 on, and went to Phil Town's workshop in the Atlanta, Georgia area that fall of November of 2017. So I got really into it from that point on, and that totally changed my life. So I know.
Yeah, absolutely. And my journey is very much like yours in that way. I had been investing in stocks and all kinds of different things, microloans and crypto and all sorts of things, and taken a lot of courses in day trading, technical analysis, things like that. And I was left with, okay, but everything about this is about guessing. Isn't there a strategy? That's what I called it. Isn't there a strategy for investing? I was really looking at, there must be something where you can predict more what's going to happen. And that's also when I read Invested and about Warren Buffett's approach. It was like, this is a strategy. This is exactly a strategy, and not just drawing something on a chart and then hoping that that drawing is correct. No, you are much more certain here that what you have been looking into will also turn out to be correct. And if it is not correct, you just know you've done your homework and there was some things that you probably couldn't have predicted. So for me, it was really a huge help to read that book, and also from Danielle's perspective, which I really, I felt like I totally understood where she was coming from with her career in particular. And one thing that also got me really, really serious about investing from that book was when I read about inflation. And I had learned about inflation in business school, and I knew it was something about when you buy milk one year, then the next year is going to be more expensive. But I never thought about that when I had savings in a savings account, inflation would actually eat those money every year, because now an ice cream is, $1, and in 10 years, that same ice cream might be $10. So your buying power is just eroding year after year. That was such a big aha moment for me, where I was, okay, I really need to take this seriously. I've been interested in it in the past, but now I need to take it seriously.
In a similar way, I felt like having this actual concrete strategy of how to invest was a huge help to get me more organized, because I didn't know how to value companies before. And I appreciate how the Invested book spells out 3 valuation methods you can use, like in a step-by-step recipe format. And I felt like that was super helpful, because if you just read online or watch people's videos, they might walk you through maybe an example valuation, but then it feels like they're skipping so many steps and they don't break it down exactly what to do. And especially for someone earlier in their investing career, or like what I consider more of my for real investing career, because even though I invested a little bit when I was a teenager, I had no idea what I was doing. So to me, it was game changing. It given me a step-by-step way to be able to get a grip on something and do the homework. Like before, you could read about stuff, you can read articles, but you don't know if you can really trust those articles either. Like you don't know if someone's like, oh, this company is, they have such great earnings and they're really awesome. Like, sure, maybe you can believe it, but how can you test it? So it was really refreshing to be able to get a method from someone who, Danielle is a lawyer by her training. So she's always thinking of both sides of the coin, to be like both the case for the stock and also the case against the stock, so that you prepare yourself into what you're getting into and not just reaffirm your own biases. Because some people don't know this, but when we do things like Google searches, and if we're not doing it in private browsing mode, we will get results that affirm our own biases. So if you only read those results, you'll be like, if you put Tesla is the best company ever, and then you just put results about why Tesla is the best, and then you'll only get that. You won't get the opposite argument of reasons why Tesla might not be the best. I mean, maybe they are, maybe, who knows? But you have to also put that into a perspective of, could I be wrong? You have to have some humility in your own investing judgment, because if you think that you're always right, you might be fooling yourself. So it's not to say that you can't be a good investor, but you have to also try to look inside yourself and know the bounds of your knowledge and abilities.
One thing you mentioned was that you went to Phil's workshop, which I also was able to go to in Atlanta, Georgia. And what I really liked was the personal touch to it, to get that guidance by taking a course with him. So I really, really like that. And it's also something that I hear in my own business is, that personal touch made a huge difference. Even when I have brand new investors that are coming in, I don't necessarily immediately share the Warren Buffett style of investing, because we start from the very, very scratch of, okay, so you need to start with a broker and from the very beginning. But I always have that element of Warren Buffett investing, even in the very, very early stages, and then, just pile it up so that people understand it, because there are so many people out there that think that, okay, the stock price that I can see today is just what I'm going to pay for it. Today, I want to buy a stock and I've decided I want to buy this one and this is what it's going to cost. But that's not a strategy. And that's what the whole Warren Buffett investing method is, to actually make a strategy and have a strategy before you start investing, and also have that certainty that the stock or the company will do better than in the future than it does today. And it's not about drawing head and shoulder formations and things like that, or all the other. I went through so many courses where I was still wondering, why is it all about hoping and guessing? It's not really about being certain. And I just think that the Buffett-style investing gives me more certainty.
Yeah, that's a great point. Of having this method of investing gives you a sense of conviction about what you have done some hard work in researching, and you form an investment thesis that you feel like you've gathered a lot of evidence for. And so you might really believe in it. Like, as long as you did the homework, then it's okay to have that conviction. But before, if you just do technical indicators, like, you try to draw, like what Signe was talking about, head and shoulders on a chart, like, oh, based on this pattern, the stock can go up and down. And, it's like trying to read the clouds, like what Phil Town has said. It's like, or if you have a Turkish coffee, it's like trying to see the little, remnants of
reading
coffee
tea
grinds.
leaves.
Exactly. You're trying to guess, what does the future hold, or like, tarot cards or whatever. Like, stock investing is not any of those like kind of fanciful prediction things. It's not like that. It should be something that you can have a reasonable estimate of the business's underlying economics. Like, you can see the tangible results. So, for example, if Apple sells X amount of iPhones and X amount of tablets, and then they grew their ecosystem by X amount based on more people signing up into the Apple ecosystem. Like, those are tangible metrics you can measure, and you can see how Apple's business is growing and staying strong. Those are the kinds of things that more of us should pay attention to, not being like, oh, it went up and down in the chart, like whatever. That's why, a lot of Warren Buffett-style investors don't even pay attention to the stock market at all. If they feel like it's a good business, they're like, this is what the value is that I'm willing to pay for, and then they will buy it. Like, it doesn't matter the stock market's volatility per se, which is the price movement going up and down at a certain rate in a certain amount of time. It doesn't depend on that. So that's a very great point you were making.
And I really feel that there are so many people that doesn't necessarily know about that. Do you have any other aha moments from your life, personal finance, or investing that you can share?
Yeah, another great thing about, as you're trying to learn about investing, you shouldn't feel like you're being pressured to do any particular thing. For example, you mentioned the personal touch with Phil Town's workshop. At no point did I ever feel like I was being sold to, because you get a lot of those in investing, or like with real estate and tax liens. Like, you could go to a course that's like, oh yeah, buy our course now, so how to take advantage of tax liens. Like, you better do this because you're missing out if you don't buy my course. No one should ever make you feel like you're forced. And that's what I appreciate about like the invested mindset of how their course and book and podcast, a lot of it you can learn for free how to invest. You actually never have to buy any of their stuff in order to invest like a proper investor. So you should seek out resources like that. Like, sometimes going to the next level is warranted in paying for a course like Signe's course. I would support Signe's course because I believe Signe is a very trustworthy person, and I'm not trying to sell Signe's course. Like, I'm not trying to promote Signe above and beyond anything, but what I'm saying is no one should ever make you feel forced. And I don't think, that's the experience with Invested or Investionista. You get, what you see. So that's another thing that is so refreshing, because you can easily feel pressured with so many things. Like, if you go on Reddit and then people are like, oh, go do this, or this has happened to me in the past on Instagram, where someone tried to replicate my Instagram and like make a derivative version of my name. And then they would try to message people and say like, oh, you better sign up to this crypto thing so you can become a crypto millionaire. And it's like, I never promote crypto. I would never tell anyone to get into that. So, you should always be mindful about that. Like the real investing isn't where someone's trying to sell you something. It's where you have the freedom and the space to be able to learn on your own. We're all about take your time, don't do anything rash. We're not trying to get you into the next hype thing. We're not about that. So that's another aha moment.
I totally agree with what you're saying there, but actually let me expand it a little bit more, because I really believe that Warren Buffett has built a community around him that's about giving and paying it forward. In all the investors that we've had on the show and we've met, at least for me, it's people that want to give. And I'm also that type of person, very, very eager to share my knowledge and to give. And that is not what you see in the typical Wall Street movies and the impression you get when you hear about some of these finance bros. It's not that it's someone who actually wants to give back. Typical finance bros that would rather take than give. And I think that Warren Buffett is just the opposite of that, and his community. And he's really built a community. And one thing I thought about is, if there's one thing about his legacy that I want to continue, of course, it's his investing strategy, but I also want to continue this community and work very hard on having a community that thrive the Buffett way, that's about giving and caring and helping each other out, and continuing this community long after Buffett is gone. And I thought about, I wanted to help with that. Yeah, just something I thought about from what you were saying there, Michelle.
Yeah, and to your point, with the Warren Buffett community he's built from Berkshire Hathaway, it's a positive flywheel. Like it started out small, the Berkshire Hathaway annual meeting, like very few people to a little room, or like a small town hall kind of feeling, or a restaurant.
Yeah,
and
then
canteen,
it grew. I think they wrote something. Yeah,
and then now it's like filling a whole stadium. So you can see, the positive way that Berkshire Hathaway invests is something that draws more people, because people want to go to the light. They don't want to go to the darkness. I mean, as much as the darkness also draws a lot of people, but Warren Buffett's way also is a way that draws a lot of virtuous people. And it shows. Like there were so many kind investors who want to give back that we met at the Berkshire Hathaway annual meeting, the 2 times we've gone so far. And it's just amazing of a feeling to give back and help people. And it's even something I evangelize to people that I meet, like when I just meet new friends for the first time, and I tell them, oh yeah, like Berkshire Hathaway, do you know about Warren Buffett and Charlie Munger? And I'm not trying to force it on people, but I'm just saying like, oh yeah, it's actually really great. It's a beautiful thing to be part of this community of like-minded investors who want to help you financially get better through whatever way that they've learned. And it's this like sharing. And ultimately, the takeaway from Warren Buffett is do business with people you can trust. And if you treat other people right, they will also treat you right. So you keep the positive flywheel going as long as you maintain those kinds of attitudes and an upstanding moral ethos. And also, Signe, was there anything else you wanted to add before we wrap up for today?
Yes, I do have another aha moment I got. It's from Mary Buffett, who used to be married to Peter Buffett, Warren Buffett's son. And after, they aren't together anymore. But she has written some books about Warren Buffett's style of investing. And one of them mentions the difference between a healthy and a sickly company. So a sick company or a healthy company. And I thought that was a really, really interesting thing. And I often use it still. When I look at a business, I think, is this a healthy or a sickly business? And one thing that Warren Buffett does to identify whether a business is healthy or sickly is to look at the long-term debt, if they have debt or not, and then right after, look at the return on equity. So he doesn't want long-term debt. And if the company doesn't have way too much debt, then he looks at the return on equity. which is a number that you can find in the annual reports, and you can also calculate it yourself. But that number, if it's above 10, is when he says then it's a healthy business, and if it's below 10, it's a sickly business. And there are other indicators that will show you if it's healthy or sickly. But I thought this is really important, a really important question to ask yourself. Is this company healthy or sickly? Because you don't want to invest in a sickly business, right?
Yeah, and that's actually a great point. It reminded me just now of maybe possibly sickly business might be Domino's Pizza. And I know they rebranded to just Domino's, but they seem to have a ton of long-term debt and way more debt. Like it's at least 10 years worth of their earnings. And what we learned from Phil Town is that a company shouldn't have more than 2 to 3 years of earnings for their long-term debt, that you could pay off your long-term debt with just 2 to 3 years of earnings. So that's another possible warning sign about Domino's. I'm not sure what Domino's return on equity is, but maybe just like if you eat too much pizza and that's the only thing you eat all the time, you might get sickly, just like maybe Domino's as a company could be right now. And it maybe is not surprising that their stock price has been kind of going down a little bit for a while. So that's an ultimate way to just reinforce what you just said of, might it be sickly? I mean, I'm not trying to bring down Domino's. Maybe it's a great business. Like it had been a great business, but I'm not sure if they just put on way too much debt. So as you can see, debt weighs on people the same way it weighs on companies. And you don't want to do that to yourself if you want to be a healthy person and a healthy business. So yeah, with that, Signe, maybe let's wrap it up for now. And
And we will be back on Tuesday in a week. So enjoy your summer day, and we'll see you on Tuesday.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.